Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy right now in December of 2023. And if you've watched a couple of my last videos that I've posted, you know that I've been buying up stocks like crazy right now. So in this video, we're going to be discussing another 10 stocks that could be phenomenal buying opportunities for the month of December, right before we start the new year of 2024, and I just want to make you aware of what I am buying right now. But you should always make sure to do your own research on these companies to ensure that they are good for your portfolio. But with all of that being said, I say go ahead and smash that like button right now, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I say let's dive right into today's stories. So you may be wondering why I picked each of these companies, so we are going to be going over a quick summary of each one of these stocks and why I believe they are a fantastic long-term investment, and we are going to start off with CrowdStrike, ticker symbol CRWD, which currently trades for approximately $250 per share, although analysts believe it could surge up to $280 over the next 12 months. There is a need for cybersecurity solutions right now, especially as the world becomes more digitalized and technological, and this means that our cybersecurity solutions need to be more innovative than ever before. And it just so happens that CrowdStrike is leading the charge in this overall space, especially in regards to securing data that's kept in the cloud. CrowdStrike collects security data from many of its users, they analyze this data, and they automate security throughout their entire network. And here's what I like about the company. Their platform, known as the Falcon platform, detects new threats very effectively thanks to their global security solutions. And here's what I mean by that. The more entities that adopt CrowdStrike's solutions, such as their Falcon platform, this means that CrowdStrike can use threats and analyze that company's data and then protect other companies within its ecosystem from those exact threats. So if one of the companies that is using CrowdStrike has a threat, that threat would automatically be neutralized across all of the other companies that aren't even being attacked right now. So it fortifies all of the companies underneath CrowdStrike's umbrella who is using their solutions, even if one threat occurs somewhere else in another organization. And I think that is extremely innovative. With almost $3 billion worth of annual reoccurring revenue and a 26% free cash flow margin, CrowdStrike's growth has been extremely impressive, but this is just the beginning, considering that their current addressable market is $76 billion right now, but it's going to more than double by 2026 to where their market opportunity could exceed $158 billion. So I think getting into this company could be a phenomenal investment opportunity. Next up, let's talk about PayPal, ticker symbol PYPL, which is an absolute cash cow machine, even though their share price has dropped by 75% from its highs, and I think this is a phenomenal time to buy this company because it's trading for such a cheap share price. The main reason why their share price dropped so aggressively is because investors were disappointed in PayPal's overall growth slowing down a little bit, and they were also fearful of a recession to where they could foresee consumer spending decreasing during the near term, and that's why a lot of investors decided to sell out of PayPal. But I think this is a huge mistake. PayPal is an absolutely amazing company, and I think it's important for investors to realize that this company is still going strong and they are highly profitable. The company currently has around 430 million active users between PayPal and Venmo, and they process together around $1.3 trillion worth of annualized payment volume. And right now, like I said, is the best time to buy this stock, considering that the stock is trading at its lowest price to sales ratio ever, and they are trading at just 12 times their forward earnings. So from an accounting ratio perspective, this company is the cheapest it has ever been according to their PS ratio or PS multiple, which is phenomenal news for investors because it means we are getting a phenomenal buying opportunity in this stock. Currently it trades for $58 per share, while analysts believe it could surge up to $118 over the next 12 months, and I suggest you look further into this company so you can take advantage of this phenomenal buying opportunity. Next up, let's talk about one of my favorite companies. Literally, I can't brag about this company enough, and that is Mercado Libre, ticker symbol MELI, ticker name MELI. Now, I know what you're thinking. This company is currently trading for $1,597 per share, while analysts believe it could surge up to $2,120 over the next year. And if you think that this company is too expensive for you to buy, then think again. Because if your platform offers share slices or fractional investing, you could invest into Mercado Libre for as little as $1. So I would encourage you to do research on your investment platform so you can fractionally invest into Mercado Libre. If you don't know what this company is amazing. Mercado Libre is often referred to as the Amazon of Latin America, and here's why. The company operates an extremely impressive e-commerce business which has dominated their respected regions, especially very populous regions such as Brazil as well as Argentina. But that's not all it does. On top of their e-commerce business, they also operate a fast-growing payment platform called Mercado Pago and a logistics business known as Mercado Envios, as well as a lending business and many other segments which they are involved in. You should also be aware that their marketplace alone saw $10.5 billion worth of merchandise volume in the second quarter of 2023, which is 47% higher than the same quarter in 2022. On top of that, their Mercado Pago segment processed approximately $170 billion worth of annualized volume, and we also need to keep in mind that all of these business segments are relatively in their early stages. For instance, their e-commerce segment only makes up around roughly 8% of Amazon's, and their payment volume equates to 12% of that of PayPal. So this is why I love the company so much, because Mercado Libre isn't just the Amazon of Latin America. Essentially, it's like combining Amazon, PayPal, Square, Shopify, and many other companies all rolled up into one massive company, and that's why I absolutely love Mercado Libre. So I would encourage you to look further into this company as well. Next up on our list, we have Airbnb, ticker symbol ABNB, which currently trades for $140 per share, while analysts believe it could skyrocket up to $185 over the next few months. This company has been a huge success, especially as they start to take away market share from hotels. And there are only a few other companies that have been so successful in disrupting an entire industry as Airbnb has. For instance, Airbnb has more than 4 million hosts that list accommodations on its platform, and the numbers are jaw-dropping that they are generating from this, because Airbnb's platform had a total booking value of $18.3 billion, which equates to a 17% year-over-year growth rate. So if somebody had a rental property near the water and they're not staying there, they could rent out that property on Airbnb to where other people could stay there either 1 night, 7 nights, or however long they want, as long as they are willing to pay for almost like a short-term rental, which has been exquisitely successful for this particular company. Looking forward, Airbnb has more than $11 billion in cash and short-term cash equivalents on their balance sheet, and this gives the company massive growth opportunities as they continue to expand. Therefore, I think this is a phenomenal long-term opportunity if you were to buy into this stock, especially if you are more of an aggressive investor. Next up, we have Shopify, ticker name SHOP, ticker symbol SHOP, which currently trades for $71 per share. Although they only trade for $71, there are analysts who believe this company could surge as high as $100 per share. If you didn't know, Shopify operates a platform that is designed to allow businesses of all sizes to sell their product online with a relatively low barrier to entry, and this is phenomenal. Shopify also offers a subscription plan starting at just $39 per month for businesses who want adjacent services to help their business, such as payment processing solutions and logistics. Shopify is truly the one-stop shop approach, which is enabling e-commerce for very small businesses. The platform has already generated $6.3 billion worth of revenue over the past 4 quarters. However, this is just a fraction of their overall market opportunity, which comes in at around $153 billion. And with their powerful ecosystem, this company is anticipated to surge even higher in their overall share price over the next year. Next up, we have Intuitive Surgical, ticker symbol ISRG. This company is trading for $316 per share, while analysts believe it could surge up to $400 over the next year. If you didn't know, Intuitive Surgical is the market leader in robot-assisted surgery, which beats the shaky hands of various surgeons, especially due to their Da Vinci surgical system, which is the thing that has made them a market leader in this regard. They already take up around 80% of the worldwide market opportunity for their respected segment, making this company a clear market leader, and that means no one is even close to them in regards to competition. Therefore, robot-assisted surgery could be a long tailwind and a growth catalyst for investors who would want to get into this technology early by investing into Intuitive Surgical. Next up, we have a very well-known company named Disney, ticker symbol DIS. Currently, Disney trades for $91.89, although analysts believe this company could surge as high as $121 over the next 12 months. Disney is like an all-weather stock, and it's a good, fundamental, stable company to hold in your portfolio, because it is very diversified amongst its theme parks, movie business, Disney Plus, which is their streaming service, as well as their overall merchandise that they sell. However, Disney is still trying to figure out the best way to make Disney Plus a profitable segment of their overall business, but it is trending in the right direction. For instance, the demand for Disney Plus, their theme parks, and especially their movies have been very strong despite inflationary pressure and recession fears in the macroeconomic environment. The company also recently announced that it will invest $60 billion over the next 10 years in their theme parks as well as their cruise lines to make some adjustments which will further revenue growth in the future. Overall, the best part about Disney is their intellectual property, which would include the Marvel Cinematic Universe, Star Wars, ESPN, Pixar, as well as their Disney brand. They are a cash cow machine thanks to their theme parks and the various revenue segments that they have, making this company truly an all-weather investment for your portfolio. Next, we come to one of my all-time favorite stocks, which is Berkshire Hathaway, ticker symbol BRK.B. This massive holding company is currently trading for only $359. And like I said before, if your platform that you are using to invest has fractional shares or share slices, then this company could be the company for you. Again, I would put this up there with some of the best stocks that you could possibly own right now, while analysts and hedge funds believe this company is at minimum worth approximately $410 per share, meaning that right now is a phenomenal time to buy this company. If you didn't know, this is a holding company that is made up of a lot of various growth stocks and value stocks. Berkshire Hathaway owns a collection of about 60 subsidiary businesses, including household names such as Geico, Duracell, Dairy Queen, and a few others. You should also know that Berkshire Hathaway also owns a portfolio of common stock worth approximately $355 billion, which would include massive investments in Apple, Bank of America, Chevron, American Express, and Coca-Cola. So if these other businesses do well, that automatically makes Berkshire Hathaway do well, which should show up positively in your overall portfolio. You should also know that these stocks were handpicked by a legendary investor named Warren Buffett. So it's essentially like having a legendary investor run your portfolio for you, and the only thing you would need to do is invest into this one stock. Berkshire Hathaway as an investment has continuously outperformed the overall market by a sizable margin. For instance, Berkshire Hathaway has literally surged by 3,787,464% ever since Warren Buffett decided to run the company. So there is no reason to believe that it won't continue to outpace the S&P 500 and the general stock market in the future. So again, this is one of the best stocks to buy right now. Next up, we have Amazon, ticker symbol AMZN, and like we've talked about, this company is a giant e-commerce company that is trading for only $146, while analysts believe it could surge up to $230 over the next year. But Amazon is so much more than just an e-commerce company, considering that their Amazon Web Services, which is their cloud platform, is also a market leader, which competes directly with companies like Microsoft and Alphabet. The growth potential of this segment is astronomical, and it's also relatively young, considering that the market for the cloud industry is anticipated to quadruple in size to a worth of $2.3 trillion by 2032. On top of that, Amazon also has a ton of potential in other areas such as healthcare, grocery stores, neighborhood markets, and many others, making this one of the best companies to buy right now. Lastly, and of course my top pick for multiple videos now, is Alphabet, ticker symbol GOOGL. Alphabet is currently worth $132 per share, while analysts believe this company could easily surge up to $180. Alphabet may not be a household name, but Google and YouTube certainly are. And just Google alone, Google is divided into two main segments. You have Google Services and Google Cloud. On top of that, you could also include things like YouTube, Google Play, Gmail, Android, Chrome, but we also have Google Cloud, which is the company's cloud service division, and it has the number 3 market share, competing against large players such as Amazon and Microsoft. Currently, this segment of Alphabet and Google make up around 10% of the company's revenue today, but what I really like about this company is actually their Waymo subsidiary, considering that Waymo is focusing on self-driving technology, which is going to be a huge market in the future. Overall, that would be my top 10 list to invest in December of 2023. So if you want one last look at the list, here it is on screen right here. And with that being said, I hope you go and smash that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month. And with all of that being said, I will see you in the next YT video.